Hello friends, how are you? I hope all of you are doing really good. So welcome to the first lecture or the first actual session of this batch. Cost and Management Accounting, paper number 4, CA Intermediate. Okay, so we are going to start with our first chapter. First chapter is Basics of Costing, and as I told in the introductory lecture, that everything we are going to talk about the concepts, right? Sir, the first question that comes to the mind that many students have been asking me that, sir, is this chapter important? The first chapter, that is Basics of Costing. Yes, this chapter is the base of costing. If you understand this chapter, you will be able to understand many terminologies which will be practically implemented in the chapters, right? So this chapter is a purely theory chapter. It is a purely theory chapter, but yes, very, very, very important, sir. It can be asked in the theoretical form also. And also now, because you have the MCQs can be asked from this particular chapter. Sir, MCQs, yes, the MCQs will definitely be asked. Something can be asked from this particular chapter. So this chapter holds a very good importance from the examination point of view. You cannot take it lightly. In fact, each and every chapter that we are going to cover, that is, each and every chapter is going to be really important, right? Do not ask me that, sir, which is the important chapter, can we skip some chapters? No, not even a single chapter you can skip out here, right? Okay, so let's start with the first chapter, that is Basics of Costing. Now, when we are talking about this terminology costing, so we are going to start with our first chapter, chapter number 1, that is Basics of Costing. Basics of Costing, right? Now, sir, when we are talking about this particular term costing, right? Sir, we call this subject in a various forms, right? We call it as cost also. We call it as costing also, right? We call it as cost accounting also. Cost accounting also. And we may call it as cost accountancy also, right? Sir, as a layman, if you talk about as a layman, all these three terminologies mean the same thing to you. That is cost and management accounting, or costing, or finding out the cost. Simple. But if you go into the deep terminologies, there are small differences in all the three terms. What is costing, what is cost accounting, and what is cost accountancy? Right? Now, let's come to the costing part. What is costing, sir? You go to a movie hall. You go to a movie hall to watch a movie, right? And you come back home. What is the first question that your parents will ask you? That how much you have spent on watching the movie, isn't it? This is the first question that every parent is concerned with. The first question your father will ask you, come here, come here. Now you will be fearful. What is the father going to ask? The first question that he will ask you, how much money have you spent? Isn't it? How much money have you spent? Right? So okay, before this terminology costing, one very important terminology that I want to discuss. Very important. I'll come to this movie hall example later on. The first terminology is, if I come to the very first terminology, what is the meaning of this particular term cost? What is this cost? You go to a shopping mall, you buy a shirt worth rupees 2000 rupees, right? You come back home, your father will ask you, how much is this shirt for? You will say, sir, father, 2000 rupees, right? You buy a shirt for rupees 2000, right? Now this is what? This is a cost for you. This is a cost for you. So the cost is any expenditure which has been done from your pocket. When the money is flowing out of your pocket, that is what is known as cost. We also call it as expenditure also, right? By the different names we can call it as cost, right? So this is the meaning of, the simple meaning of the cost, that whenever the money is flowing out of your pocket, whenever you are doing some expenditure, the expense, the expenditure, everything is what? Cost from your angle, right? Whatever the money you have spent from your pocket is a cost, right? Now coming back to costing, sir, you go to a movie hall, the first thing the parents will ask you, what is the price that you have paid for? You will say the total cost that we have incurred is, let's say, 1000 rupees. Now your father will be shocked. 1000 rupees for a movie. In our times, we just used to watch the movie in 100 or 150 rupees, including the popcorns and the burger and all those things. Isn't it? Now it's difficult to explain them. At those times, there were used to be the small cinemas. Now there are the PVRs, multiplexes, right? Now even the popcorn costs 500 to 600 rupees. Sir, which times? Okay. So the cost is 1000 rupees now, you say. How will your father identify it? Your father will say, okay. Now what is he trying to do? He is trying to ascertain the cost from you, that what is the cost that you have incurred. What is your father trying to do? He's trying to ascertain the cost. He's trying to find out that what is the cost that you have incurred. This process of ascertaining the cost, when he's trying to ask you that what is the cost that you have incurred, and you say 1000 rupees, this process is known as costing, right? So let's read it. Costing is the technique and the process of ascertaining the cost. How your father is ascertaining the cost? He is asking you. That is the process, that is the technique, right? These techniques consist of the principles and the rules which govern the procedure of ascertaining the cost of products and the services. So there are set rules, there are procedures which are followed on how to ascertain the cost, right? The techniques to be followed for the analysis of expenses and the processes of different product or services differ from industry to industry. That different industries can use the different processes, but the basic meaning of costing is that how you ascertain the cost, how you find out what is the cost. Total cost. What is the total cost? Now the next step, your father will ask you that out of this cost of 1000, what is the cost of the movie tickets, right? What is the cost of the movie tickets? What is the cost of the popcorn that you have had, right? And what is the cost of the cold drink that you had? Now you will say, father, 500 for movie tickets, 200 for popcorn, 300 for popcorn, and 200 for cold drink, right? Now he's double shocked. But what is he doing, sir? Now we are classifying the cost under the different heads, right? We have classified the cost under the different heads, that out of this 1000 rupees, what is attributable to movie tickets, what is attributable to popcorn, what is attributable to cold drink, right? So that is known as cost accounting. That process is known as cost accounting, may be regarded as a specialized branch of accounting which involves the classification, accumulation, assignment, and the control of cost. Now your father will say, next time, dare you spend 1000 rupees, dare you had 200 rupees for the cold drink, dare you had 300 for the popcorn. Try to control the cost. There is no tree on which the money is growing. I am working so hard and you are like spending 1000 rupees for 3 hours. Isn't it? Your father might say all these things to you. Yes, sir, there is every possibility, and it's okay, sir. The parents, they are working really hard for us, right? And they feel those things. It's okay. So when you are classifying the cost, you are accumulating a similar cost under one head, right? What all cost is related to the movie tickets under one head. Regarding the cold drinks under one head, whether it is a coffee, whether it is a soft drink, whatever it is, right? The costing terminology of the CIMA Limited, London, defines the cost accounting as the establishment of the budgets, standard cost, and the actual cost of the operations, process, activities, or the products, and the analysis of the variances, profitability, and the social use of the funds. Now, what your father is trying to do, your father has set the standards in his mind that the movie ticket should be around 300 rupees, right? This is what the standard, this is what he thought for. But what is actual? 500. There is a variance. Variance is the difference between what he thought the movie ticket will be for and what actually the movie ticket is for, right? That is known as the variance or the difference. So this also comes under the process of cost accounting, that when you are setting the standards, you are comparing the actuals with the standards, right? And then try to find out what are the variances. We have a full chapter on this that is known as standard costing. We'll be studying the full chapter on this, especially on this particular part, which is standard costing. Very important chapter, sir, right? Then the Weldon defines cost accounting as classifying, recording, and appropriate allocation of expenditure for determination of the cost of product or services and for the presentation of suitably arranged data for the purposes. This is known as classification and arranging the data in under the suitable heads, that what is the cost for the different things, right? So it is thus a formal mechanism by the means of which the cost of the product and services are ascertained and controlled. Controlled also, sir, this is very important. The cost we are trying to control. What is the basic objective of cost? We need to control it. We'll study about the objectives. So this was the process of cost accounting. What is cost accountancy? Cost accountancy is presenting this data in a meaningful manner to the top management. It is the presentation of data. It is the presentation of data in a meaningful manner. Presentation of data in a meaningful manner for the top management, right? For the top management. Because ultimately, see, the top management is not going to go through with all the financial statements or all the cost statements, right? What they will do is they will ask you to classify the data under the different heads, then prepare a statement and present the statement in the shorter format. And it should be in such a way that it is relevant for the top management, and the top management is able to make the effective decision making out of that. Right? So this process is known as cost accountancy, has been defined as the application of the costing and the cost accounting principles, methods and techniques to the science, art and practice of cost control and the ascertainment of profitability. That means you will prepare a statement in a proper way where you will be able to find out the cost and the profit. It includes the presentation of information derived therefrom for the purpose of the managerial decision making. This process is known as cost accountancy, preparing the statements, finding out the profit, differentiating between what is the cost, what is the profit, and then presenting it to the top management for the decision making. This whole process is known as cost accountancy, right? Now, coming to the next topic, objectives of the cost accounting. Now you need to study, now you need to know why you are studying this particular subject. If you are studying a subject of cost accounting, why you are studying this subject, sir? The first thing is, let's say you are a manufacturer. Just consider yourself, just keep yourself in that situation. I'll say you are a manufacturer. You are a manufacturer, right? Manufacturer of what? Manufacturer of, let's say, t-shirts, right? Now, if you want to sell these t-shirts in the market, you need to find out what? The first thing that you need to find out is selling price, right? Secondly, I ask you, how can you identify what is the selling price of the product? How much of the selling price to be kept of the, how much selling price you can keep for that particular product? How can you find out that? Sir, you can find out the selling price only if you know what is the cost that is incurred in the making of that product, right? Let's say you have incurred a cost of 1000 rupees in the making of one t-shirt. Then this 1000 rupees you want to recover from your customer? Obviously, sir. That is why you are doing business now, that whatever the cost that you will incur in the making of the product, at least that much amount you will recover from your customer, or no? Yes, sir. Right. So first thing is that in case of selling price, the first thing that you should identify is what is the cost that you have incurred. And without understanding the costing or cost accounting, you cannot identify what is the cost that you have incurred, right? The second thing is, if you don't know the cost, how will you set the selling price? If you don't know the cost, how will you be able to identify that what is the profit that you are earning on that product? Isn't it? So these are the objectives. The first objective is identifying the cost. Second objective is identifying the selling price. Third objective is identifying the profit being earned on the product, because the profit you will be able to identify only if you know what is the cost, what is the selling price. Selling price you will be able to set only if you know what is the cost being incurred on the manufacturing of a product, right? So the first thing is cost ascertainment. The involve the collection of cost information by recording them under the suitable heads of account and reporting such information on the periodical basis, that you have to ascertain what is the cost being incurred on the manufacturing of a particular product. And determination of selling price, that sir, if you are not able to set the selling price, how will you sell your product in the market? The cost accounting helps in determination of appropriate selling prices of the products. Generally, the selling price cannot be set below the cost. Obviously, sir, if you have incurred 1000 rupees out of your pocket in the manufacturing of that t-shirt, can you sell it for 800 rupees? You will say it's okay, I'll sell it for 800 rupees, 200 rupees, I will bear it from my pocket. No, sir, this cannot happen at any point of time, isn't it? Now, once you have been able to find out what is the cost, what is the selling price, the third thing that you can find out is the profit, ascertaining the profit of each activity, right? The profit of each activity or the job or the department or the product can be determined by comparing its revenue with the appropriate cost. Clear? Then assisting the management in the decision making. Now, how this this cost accounting helps the management. Now, the management is really interested in knowing that what is the cost being incurred in the manufacturing of that product, whether the cost is on the higher side or whether the cost is on the lower side. For example, there are two firms. One is A Limited, another firm is B Limited. Right now, they are both making a similar t-shirt, a similar t-shirt. Now, A Limited is selling price is 1500 rupees while the B Limited is selling for 1200 rupees. Now, it is a concern for A Limited. Sir, as a customer, what will you do? You will go to the B Limited and buy it for 1200 rupees. If they are selling the same product, same quality, everything is same, right? Why not go for 1200 rupees? Now, the management of the A Limited is really concerned. They say, what is the problem, sir? We are selling it for 1500 and B Limited is selling for 1200. We need to find out the reasons. When they find out the reasons, the reason was the cost. A Limited was incurring a cost of 1000 rupees, whereas B Limited was incurring a cost of only 600 rupees. Right? The difference was in the cost being incurred. There can be many reasons why there is a difference in the cost. There can be many reasons for that, right? You need to find out what is the reason for that and you need to eliminate those reasons or work on those reasons so that you can cut on your cost and be competitive in the market. Otherwise, you will lose out on the market. Clear? So the business decisions are taken after analyzing the cost and the benefits of each option. Thus, the cost accounting and reporting system assists the managers in their decision-making process, right? So whenever you have to take an important decision, there also the cost accounting plays a very important role because you have to take a decision regarding what is the cost being incurred and what is the benefit that we will be getting out of that, right? Then after the cost control and cost reduction, this is very important, sir. This is very important from the theoretical point of view. This question has been asked in the examination. What is the difference between cost control and cost reduction? The next topic that we will be doing. The cost control and cost reduction, that means the ultimate objective of any business is that to control and reduce the cost. Control and reduce cost as much as possible. As much as possible. So what will be the impact of that? They want to increase their profits, increase profits through cost reduction, through cost control or cost reduction, right? The companies, what they are trying to do is they are trying to control, they are trying to increase their profits through cost control or cost reduction, right? Obviously, sir, every businessman who is doing a business, what is the ultimate objective? The ultimate objective is earning the profits, right? If you are not able to earn the profits out of your business, then there is no point in doing business. So how will you earn the profits? Either you can increase your selling price. In that case, you might not be that competitive in the market. But the other point is that you reduce your cost. But at the same time, the business have to see the cost reduction should not mean the compromise on the quality. The compromise on the quality, which in some cases can happen. Right? So cost accounting seeks to ensure the profit by providing the support for cost control and cost reduction, that by aiding in cost control and cost reduction and increasing your profits, right? That is what the basic objectives are. So there are five objectives that we have discussed, majorly ascertaining the cost, selling price, then profits, then managerial decision making, then cost reduction and cost control. So there are five major objectives. Clear? Okay, moving on to the next one, that is the difference between the cost reduction and the cost control. Now, both of these terms, you might say that, sir, these are the similar terms. What is the difference in these terms? There is a small difference. There is a small line of difference. What is cost reduction? What you do in case of cost reduction and what you do in case of cost control? What is the basic that you need to understand? So there are two terminologies. One is cost reduction, and other thing is cost control. Sir, what you do in case of cost control? What you do in case of cost reduction? In case of cost reduction, you divide your activities, whatever the activities are there going on in your firm. You divide those activities into value added and non-value added. And non-value added. That means what are the important activities going on in your business? Important activities means those are adding some value to your product. Those activities should be kept. Whereas if there are some non-value added activities, that means all those activities which are not adding the value to your product, but those activities are only adding to your cost, right? They are not adding the value at all to your product, but they are adding to your cost. He says, how can you reduce your cost now? Eliminate these non-value added activities. Eliminate, right? Sir, is it going to impact the quality of the product? No, sir. Because the quality, these activities are anyhow not contributing to your product. They are contributing only to your cost, right? So the quality of the product will not be compromised. So then what we are doing in case of cost control? In case of cost control, what you do is you set standards, then compare the standards with the actuals and find out variances. And you try to find out why there is a variance. For example, you say in the manufacturing of one unit should be manufactured in, let's say, 5 hours, right? And what you are paying for those 5 hours is, let's say, 10 rupees per hour. That means 50 rupees you will be paying. This is the standard what you have actually what you thought for, right? What actually happened? One unit took 6 hours. So your cost will increase, sir, 60 rupees. This is the variance. Now 10 rupees, which is the extra cost that you will have to pay. What is that? That is a variance for you. You will try to find out why there is a variance, right? And what you will ask your worker, you will say, no, I told you to prepare it in 5 hours. You have to prepare it in 5 hours. I'm not going to accept it in 6 hours. In that case, what will happen, sir? In that case, what will happen? Your worker will say, okay, you want it in 5 hours, I'll make it in 5 hours, but the product quality is no guarantee. If you want the product quality, it will take 6 hours. But if you want it in 5 hours, I can make it in 5 hours, but then do not ask for the quality of the product. Now, in this case, in case of cost control, the quality of the product might get compromised, right? So this is all what is given here. The cost reduction involves analysis of each activity into value added and non-value added, right? Simplification of the value added activities, that if they are adding the value, if we can simplify some procedures and you can reduce your cost in some way, right? And the elimination of the non-value added activities, that anything we can eliminate which is not adding the value to our product, which is actually adding to our cost only and not to our product, right? The next thing is cost control. The cost control involves determination of the predetermined standards, measurement of the actuals, comparison of actual with the standards, analysis of the variances, and then the action. Savings in the cost per unit, savings in either the total cost or the cost per unit, that is fine. The product quality is not compromised, as I told you, because we are eliminating only the non-value added activities. The product quality maintenance is no guarantee, because the worker will say, you want it in 5 hours, I'll give it to you 5 hours, but the product quality, I cannot say that the product will be top-notch quality, right? If you want the top-notch quality, then I will be spending 6 hours on that product. Clear? Performance evaluation, it is not concerned with the maintenance of performance according to the standards. It is not, we are not, in case of cost reduction, we are not comparing the standards with the actuals, right? So there is no point in performance evaluation. But in case here, this process involves setting the targets, investigating and taking the remedial measures. In this case, you are setting the standards. In this case, there are no standards being set. There is no performance that you have to judge of a worker. It is only the non-value added activities of the worker that you are eliminating. For example, sir, for example, what can happen? What can be the non-value added activities? For example, there is a three-story building here, right? First floor, second floor, 1, 2, and 3. Ground floor, first floor, second floor. Now your worker is sitting here, right? He needs water in between. Yes, sir. Your water cooler is lying here. Here is your water cooler. Now, what happens, sir? What is this non-value added activity? Sir, this worker, whenever he needs to drink the water, he has to come down 2 floors, drink the water, then go up. It is time wastage or no? You will eliminate this. You will take this water cooler to the 3rd floor, right? He can drink the water immediately, start working. Why to waste time, sir? This is how you can reduce your cost. In this way, you are increasing your cost because the worker will be wasting the time and you have to pay for that normal wastage. You'll have to, sir, obviously you cannot ask your worker, do not drink the water. You cannot ask that to your worker, sir. The worker is working, he needs water, he needs food, isn't it? So here you are not evaluating any performance. You are not judging the worker on the performance, but in this case, you are judging the worker on the basis of the performance. Now, target, it is an ongoing and continuous activity. Yes, from time to time, you keep on identifying what are the various non-value added activities which are there, and you try to keep on eliminating them, or you keep on simplifying your processes which can help you in the cost reduction. The cost control ends when the target cost is achieved. Now, if that worker starts manufacturing in the 5 hours, that means your standards, whatever you thought for, it has been achieved. The end, sir. What is the need for the cost control? Then no need for the cost control because whatever you thought for has been achieved. The end. That's it. Right? Universally applicable to all the areas of business, limited applicability to areas where the standards can be set. Only there we can do the cost control, right? Emphasis on the present and the future cost, emphasis on the present and the past cost, what has been incurred, because when you are comparing the standards with the actuals has already been incurred, right? You are comparing your standards with what has been incurred already, right? Nature of function, corrective action. You will take the corrective action, you will eliminate the non-value added activities. Here the preventive function for the future, that in future the cost should not increase the standards, right? So this is about the cost control and cost reduction. This is important from examination point of view, sir. This is important, right? It has been asked multiple times as a theory question, right? It is not necessary to write all the points, but yes, 4-5 points at least you should remember. Now, coming to the difference between management accounting and cost accounting. Now, when we are talking about this whole subject, cost and management accounting, right? Sir, is management accounting really different? What is the basic difference between the management accounting? Sir, try to understand what is the basic difference. The basic difference is this is your management accounting and this is your cost accounting, right? The outer layer is your management accounting and the inner layer is your cost accounting. That means the management accounting is a wider subject than the cost accounting. Why? Because in case of management accounting, they are using the financial accounting also. They make use of the financial information also, right? In case of management accounting, they use cost accounting as well as financial accounting. They are not concerned only with the cost accounting. And when we are studying about cost accounting, we are concerned only with this part. We are not concerned with the financial accounting, sir, at all. So that is why management accounting is a wider terminology. So application of the principles of accounting and financial management also is included in this, right? Financial accounting, financial management, when he's using the word accounting, it is cost accounting, financial accounting, and financial management. To create, protect, preserve, and increase the value of the stakeholders for the profit and not for profit entities in the public and private sector. So management accounting is basically how you manage your business so that you add value to those people who have invested in your business. That is adding value to the stakeholders, means stakeholders. Who are the stakeholders? Who have invested in your business. So in the management accounting, basically what is the purpose is you have to see that whether your business is being efficiently run so that you are able to create the value for those stakeholders, right? Cost accounting, we have already started. Cost accounting is mainly focused on only the cost reduction, cost control. right? Recording of income and expenditure, ending with the preparation of periodical statements and reports for controlling the cost. Objective: to provide relevant information for the planning and control functions of the management, overall functions of the management. Management is a bigger terminology, right? And here the objective is the cost ascertainment, right? And the cost reduction and control. Nature of data is derived both from the cost accounts and the financial accounts. Here only from the cost account, sir. Base to which the cost accounting data generally serves as a base to which the tools and techniques of the management accounting can be applied to make it more purposeful and management oriented, right? That it is presented in such a way, it is presented in such statements that it is meaningful to the management, right? Is placed at a higher level, cost accountant is placed at a level lower than the management accountant. Obviously, sir, the management accountant has to see a lot of things in one business. Cost accountant is concerned with only and only the cost accounting part. Management accounting is a futuristic approach. Cost accounting is mostly historical approach, because in the cost accounting, what we are recording, the cost which has been incurred already. In the management accounting, what we are trying to do is we are trying to foresee the future so that we can create the value for the stakeholders in the future, right? What all decisions we can take for the future so that it adds value to the stakeholders, right? Management accounting cannot be installed without a proper cost accounting system. Obviously, sir, for the management accounting to be efficient, the cost accounting system needs to be properly installed. The cost accounting system can be installed without management accounting because it is independent of management accounting, right? Considers both the qualitative and quantitative aspects. Here only the qualitative, considers only the qualitative aspects, right? Planning, it is concerned equally with the short range and the long range planning. It is more concerned with the short range planning, and in the short range, what is the cost being incurred, what is the cost being incurred, how we can control those costs. So majorly we are interested on those type of decision makings, right? Okay, so we'll continue from here. The different types of the cost we will continue, right? There are some other information like the essentials of a good cost accounting system. That what should be the good accounting cost accounting system means any system. How can it be made good? If it is simplified, if it is easy to understand, if it is easy to implement, if there is no resistance, right? So simple and easy to operate. Accuracy of the data, if you are not getting the data accurately, then what is the purpose of that system? No, sir, right? It will be defeated. Relevance of the data, the only the relevant data should be presented, should be picked and presented. The management's role, the top management should have a faith in the costing system and should also provide a helping hand for its development. If the cost accounting system has to be successful, then the support from the top management is really essential, right? If you are not getting support from the top management, then the systems cannot be implemented. Participative role of executives, that is the lower level executives who are working on the ground level. If they are not participating in the proper implementation of the cost accounting system, can it be implemented? No, sir, it cannot be implemented. Cost effective, obviously it should be cost effective, sir. It is not like you are spending crores on the cost accounting system to save a cost of a few lakhs. That is, does it make sense? No, sir. You want to save, let's say the 10 lakhs in the activities you save, and you are spending 10 crores on the implementation of the system itself. Does it make sense? No, sir, right? Smooth implementation, the implementation should be smooth, carefully planned, that there is no resistance from the employees also. So everything should be there. So remember this flow chart: simple and easy, accuracy of data, relevance of data, proactive top management, participative executives, cost effectiveness, and the smooth implementation, right? After that, essential factors for installing a good cost accounting system. You should be clear with the objectives, that what you want to achieve by installing that system, right? The objective of the system, whether it is being introduced for the fixing the prices or for installing a system of cost control, that why you are introducing that system, you should be very much clear with the objectives in your mind. Then the scope and extent of coverage, the areas of the operations where the management section will be most beneficial. The system of costing in each case should be designed to highlight in significant area the factors considered important for improving, right? How much area, what all factors of that particular business needs to be covered in that cost accounting system, right? Then organizational setup is very important to consider, that what is the organizational setup, the technical aspects, what is the product profile, types and classification, methods and techniques of production used, that how that business is actually being run. The cost will be identified according to that. The cost accounting system will be installed according to that, right? Psychosocial aspects, that whenever you are implementing a new system, the employees, they can resist because they are in that comfort zone, right? That we are okay with the existing system. Why to come up with the new system? They will ask the top management. So you have to consider the psychological impacts on that, and you have to be prepared for the resistance and how to tackle that resistance. You should be prepared if you want to implement effectively the cost accounting system, right? The impact of the expansion, the manner in which the different variable expenses would be impacted, that if you implement the system, will there be any extra cost that will be implemented, sir? The impact on the accounting system, that whatever is the existing financial accounting system or the cost accounting, what will be the impact on that? Information requirements, that what all kind of information do you require, right? Only then accordingly you can set the cost accounting system. Statutory compliance, the extent of records to be maintained to ensure the compliance with the cost accounting standards, cost accounting record rules, that as per the government rules, what all is your requirement from that cost accounting system. You have to be clearly, everything should be clearly defined, only then it is beneficial, right? So just go through with it once. This cost center we'll do later on. These two topics I have covered first. Just go through these once, remember the basic points, that's it, right? No need to stress too much on these two topics, but yes, you should know the basic parts, right? So in the next video, what we will be doing is, in the next video we'll be talking about the different types of the cost. Very, very, very important, sir, for the further chapters, for the practical part. Very important. Nothing can be more important than this part. The whole of the costing is based on this different types of cost, whether it is direct cost, indirect cost, product period cost, explicit cost, implicit cost, fixed cost, variable cost. We'll talk about semi variable cost. Then all these different terminologies will be there. So all this we will be covering it up in the next lecture. I hope all of you have enjoyed this first lecture, and you will definitely enjoy the journey ahead with all the 16 chapters that we are going to cover, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.